All right, it's not quite 10 o'clock. 19th of February, 2019, reminding traders to use risk capital you can afford to lose. This is E for eMoneyWizard.com and MarketWizard.com. Okay, this is a yearly chart. And we can see the importance of just understanding support legs. We had suggested that 22 to 25 was supportive. And you can see this just sticks out like a sore thumb right here as support until broken. A very, very important idea for now. And we're going to look at the laws of proportion. So right now we can also come back to this 40 zone and say, okay, we got basically about a 40-point interval. So we're going to continue to assume until we stall and start to come back and break and come backwards, those are the intervals, and they'll probably increase in size as we go higher. Still very neutral for today. This is last year's chart, meaning from the highs to the lows, and now we're currently getting a bounce, and you can see the level that we're at right here. And this is the basis for some of the posts I made in our room last night. These highs are key highs that for now need to be respected, but the longs will want to try to take out this high over here, that 28 and a quarter. First, you got to get by this next step right here. And that's in the 27.89 and a half zone. So that's the resistance that I suggested today. My assumption is that's our resistance. And then we've got another big pivot up here at 28.12 and a half, just part of our system. And this has been a V bounce. And I think in need of, as you'll see as we go forwards, we want to respect these areas right here. This is called a pipe. One box out away from the middle. That's the pipe. So on this basis, the very next box would become resistance. And that's right there. So I'm trying to show you what I think about position and swing trading. Those traders for sure want to focus on these ideas. And then this area down here is supportive until broken. And then we've got to go step by step. So for now, we know that we're approaching that level. So realistically, this is the box that we are in, this 27.10 to the 89. So call it 10 and 90 if you want, just for round numbers. And that's what I've suggested for now as an important model. So we're taking a look at this and applying it to all different levels, not just the day trade, but the larger trades to fit these little trades, day trades inside the bigger swings. So there's a backdrop for you to understand that methodology. And basis this chart, which was the 2-year range, and this was the basis for me saying that 23.75 is support. Broke that just by about 5 or 6 points. So they're educated guesses. And people will scoff and say, anybody can do that. Well, show me, show me your ability to come down here and step by step understand what's important. This was a very important chart to us at the end of December. We are thrashing downwards and coming down without any type of sign of relief. And I said, this is the target right here. Because when we use this, if this is just a little day trade chart, this green box is our support box, and the tomato colored box is our resistance box. So because we know that stuff, we just apply that to the larger ranges. Now, could that have not held and come down and taken out? Of course, but it didn't. So that's our support. And now we've got the V bounce. And everybody was calling for crash right here, and we said, better be careful. Theoretically, January and February are usually, pretty good months. Beginning of the year. And I'd said in the last room that we were in, which we gave a bonus time to, I'd said, I don't think we're going to get a crash in February. Last year we did. I don't think we're going to do that. The market very rarely does the same thing over and over. So we had a tough February, and I think everybody's looking for the same thing, and I have not been. I've been saying let's buy support because we're in an uptrend right now, till proven otherwise. So basis this chart, we can see the tails coming up here. So we need to respect that. We need to understand the boys would love to jam it above that to knock out all of these shorts. But for now, we really need to respect plus or minus this 2,800. That's my belief. So I hope this chart, first of all, shows you the techniques that we use and the size of the swings. Nothing is further from the truth that we're just little day traders who don't understand swing trading and position trading. You've got to know this stuff if you want to be a good day trader. You're just going to reduce your focus and narrow it right down to a tight time frame for now. And then as trades play out, you'll readjust. Is a very important idea that I'm trying to share with you right now. Thrust was down, right? 2-day thrust down. And we've got a contra, convenient trade going back. 4, 5, 6. Simple as that. So here's your 456, not quite a dime. Remember I said a lot of traders, think about the 10-point trade. And I think it's the 10th point that typically gets us. So make sure you're done by that idea is typically what I would think. And there's sometimes you'll blow through and get a 20-point trade or 18 or whatever, but that's not the norm. The norm is more of a range type trade. Gap traders, what's your target? Where did we leave off? What was the gap? Got several of them. One's a late close, one's an early close. I'm going to use the notion of that 78 as our resistance, the gap resistance. If we get above that, anything goes. So already from an IB, the longs have put the ball back in play. And I think right now is the time that you want to be conservative as a long. And all we're doing is trying to make educated guesses. We said better odds long than trying to short. And the higher we bounce, then the less likely we are to come back down right away, unless there's some news event. So 15-minute chart, very helpful. Pretty neutral, really. And we were able to hold and got above the blue line, and over and under is realistically range type trade. So now we're going to be looking for these green and red lines to exert their influence on any pullbacks. And that's what the longs would love to see. I'm still not convinced. I think we've got some nasty range trading right now. And the easiest way to see your gaps, take an RTH chart. I've got 77. I'd said 78 before. I've got 77 as the close. And they really mess you up these days with those league closes because you just don't know. Anyways, the goal is not to be in the market all day long. The goal is to try to get a few points out of the swings. 1, 2, 3, doji bar, doji bar. Everything is white so far, not one black bar. Market has been bought this morning in a range type trade. Tunnel through time. I look at bigger charts to try to get ideas where I think support might be. And just kind of guesstimate areas that have seemed to be supportive, and then look for bigger ideas. And as volatility dies down, then I'll try to curve fit these back to something a little bit tighter. 65 support intact. We said make sure paid 72s to 75s, trailers above. And aggressive trades are those trades taken against the push before the gap closes. So anybody who has tried shorting and it's not worked, those are considered aggressive trades until the gap closes. And then you kind of look for some profit taking normally. Now, originally my thought today was that we would also take out the lows by a point or two, skin both sides. The size of this first bar right here tells us trouble for the short side. Anytime you can get about a 5-point bar for an angel tells you that they're buying. Look at all these pre-market stop outs. 1, 2, 3, 4. And then the fifth one takes hold. Boom. And I'd say the first sign of trouble would be if we get up above this high right here. So clearly a range type environment. And anybody gets the 77s to 78s, God bless you. Great trade. A lot of people use profile. So I've tried this the last week or two. I don't know that it gives me any particular edge other than understanding perhaps what other traders are looking at. And we can still see the importance on this chart of that 64, excuse me, 64 support called 65. Anybody that's got the 77s to 78s, I'm considering gap closed. If you've taken a long for the day back into the range and had a trailer after 72s, stops up. And we're going to use for now 78 to 82 as resistance.